Hey guys, Tommy Bryson here, and a question I always get asked is basically, Tommy, how do I start investing money in the stock market if I don't have a lot of money? And I know for sure it can be very expensive because basically right now Google is like at $1,300, Amazon is at $2,300, and Berkshire Hathaway is at $265,000. That is an entire house, right? So that's why in this video I'm gonna show you exactly how to go out there and get started investing with $1 or $5, and that is all you need to get started in the stock market, because we're not in 1980s anymore, we're in 2020, and there are a lot of ways to do this without needing to have a ton of money. But also guys, that is not everything I'm going to tell you guys, because it really wouldn't be fair to you. So in this video I'm also going to tell you exactly the apps I use to invest my own money, the strategy I use, and also how the stock market works and why the prices keep going up and down also. And I also do post videos every single day on YouTube, so make sure to subscribe to the channel, hit the bell so you get notified every time I post a new video. And on top of that, also destroy the like button, and it's also free, and if you smash it you might get a free stock. No, I'm just kidding, okay? Just smash it to help me out with the algorithm if you want to, but there are no free stocks involved here. I have to say this because I might get sued if I don't, okay? Now, the very first thing is this, Tommy. What apps do you actually use to start investing with little to no money, okay? The very first app I would recommend is actually Acorns. Now, when you think about Acorns investing app, you have to think about like, hey, this is $5 investing, because all you really need is just $5 to get started investing money. However, the main thing with using Acorns is that you're only going to be investing into ETFs and also bonds. Now tell me, why does this matter? You're not picking one company, you're basically investing into a bag full of different stocks, into a portfolio that the entire goal for is basically to diversify your portfolio, diversify your investments, and this way your money grows, but you don't really carry that much risk. So the average return on Acorns is around 7% every single year, and if that's what you want, just put in money, invest it, and have money come to you passively, then this is the perfect app for you. And you only need $5 to get started, and link down below if you want to get started with my link. On top of that, you also have the Cash App. Now, when you think about the Cash App, think about $1 investing, but you can also pick different stocks to actually invest into. For example, if you want to invest into Nokia, you can if you want to. Nintendo, you can if you want to. Nokia, I think the company has gone bankrupt, maybe not this one, but the point is you can invest into different companies, and all you really need is $1 to get started investing. So for example, if you want to get started investing with the Cash App and you wanted to buy a stock, for example, the Apple stock that's like around $300 right now, you can buy $1 worth, and this way you actually start investing without needing that much money. But Tommy, do I still get dividends? The answer is yes. You get the same fraction of dividends that you get that's worth for that $1. And that's the entire idea right there and then. Also, link down below for the Cash App. Now, number 3 is Sofi. When you think about Sofi investing, think about the Cash App and also Acorns, but like on steroids, because you get to do everything you do on those apps, but you also have a lot more investment options. You have all the stocks, all the ETFs, all the index funds, all the bonds. You have everything in one place, and you can also invest with fractional shares. Well, Tommy, why wouldn't I just go with Sofi over all of the other ones right here? The answer is Acorns is for someone that just wants to do it for the long run. Cash App is for someone that just wants to get started and they already have the Cash App, and basically why not just use that and make it very simple. And Sofi for someone that basically wants to invest into various different things while also investing partial shares or maybe buy one full share. And that is the entire idea here, guys. But again, all of these apps linked down below, and all of them pay you dividends when your dividends is due. So even though you're investing with $1 or $5, you will still get paid if you want to. However, if you want to have the dividends reinvested, you can also set that setting in the app also, where, for example, if you get paid dividends, instead of taking the money, you just have that money, buy more shares, and that way it keeps reinvesting and also compounding, which means overall in the end, you'll have more money. And now guys, number 2 is, Tommy, so how exactly does the stock market work, and why does the price go up one day and then down the other day? Well, the first thing I want to say is this, guys. Again, this video is for beginners. Now, whenever you hear, for example, a share, a stock, or equity or a little piece of a business, think about that is all just a stock. So whenever you're buying, for example, a share or a stock, all you're really doing is buying a small fraction of the value of the business. So you're not buying like a piece of paper or imaginary whatever. No, this entire like one share of 0.01% of the share that you actually have by investing like fractionally, it still counts as having partial ownership of the business in a sense, but you're not really in control of the business because it's not really a control portion of it. It's like you were a partial owner, you get some of the profits, but you just can't walk into Facebook and be like, hey, I'm an investor, do this, do that. It doesn't work like that. But tell me, why do companies choose to actually do this? Like, why do they sell pieces of their company? The answer is, well, when a company, for example, goes public, the entire goal is, hey, I need money and I need money now, so how do I do this? Well, you need to go to the public market to raise the funds you actually need to go out there and basically grow your business. And that's how Facebook did it. That's how Amazon did it. And that's how a lot of companies continue to keep expanding by having us invest money into their companies because we buy shares and then they get money and then boom, they can grow the company and then boom, we can also get profits, okay? So that's the entire idea. So why exactly does the price go up and down? The answer is because the market fluctuates based on demand and supply. So for example, one day you might see, for example, Tesla is very, very hot and people feel like, oh my gosh, you want to buy right now because the price is going to keep going up. But then all of a sudden, the next day, Elon Musk tweets like, hey, my stock is too high, and then boom, everyone starts selling and selling and selling. Why is this? Because the market is also influenced by human emotion. Basically meaning that, hey, sometimes you might have a company that is worth $1, but because people think it's so cool, it might actually be put on the market for $10, okay? But it's still really worth that $1 at the bottom, okay? So your job as an investor is to find companies that are undervalued because sometimes, for example, guys, a company might not really be that popular. They still might be worth a lot of money, but the market is trading it for lower than it's worth because there's not that much interest in it. So your job is to find those companies and then invest into it. And don't worry, I'll show you later on exactly how to find those companies and how to get started when it comes to buying for a discount and then holding. And before you know it, that starts to compound and you start making more and more and more money. But before we get to that, guys, I want to give you guys a simple example, okay? Just to make sure I drive this point home and everyone gets it, okay? So say, for example, I have a business, and in my business, I basically buy and resell cell phones all the time. New, used, cracked, doesn't matter. If you got it, I buy it, okay? However, I also have contracts with companies where they basically sell me all their cell phones and basically I sell them for a profit. However, guess what? I'm a private company, but I also want to go out there and expand my business nationwide. And you know what I'm gonna do? I'm gonna go out there and put a public offering on the market for my company. Now, to do this, the paperwork is really immense, but let's just pretend I went out there and I basically said, hey, I'm going to put 10 million shares of my company out there for sale. So whenever somebody buys that, I get that money, and now I can go out there and basically start expanding the company, and those shareholders also get money. So it's all about, I have a business, I need money, I put it on the market, they start buying, they make money, hopefully if I don't go bankrupt, and then I have money to also invest it more and basically make more money, more profits, and also grow the business. That is the entire point of the market. However, sometimes you might have someone that might say like, hey, you know, Tommy's so cool, so I'm going to invest so much more money, the company is so, oh my gosh, so cool, and then that person saying that might actually drive the price up. But then if somebody comes by and says, hey, this company sucks, it's not good, the phones are bad, customer service is bad, and if that gets out there to the media and people start to sell my shares, then in reality, guess what happens? The price might actually go down. And that's basically, in a very simplistic way, how the market actually operates. However, number 3, I want to break down exactly, Tommy, when it comes to the stock markets and investing, how do I do it? And what should my strategy be when it comes to investing? Well, the answer is it's a little different for everyone out there, but in total, there are only really 3 ways to get started investing in the stock market, okay? The first type of person is, guys, you have a person that all they really want is to invest money and then have that money grow for them. And then once they retire or like they're older, that money can basically give them income to supply them with basically infinite money. However, okay, when this person tries to go out there and buy, for example, Tesla or for example, Apple or Google, they run the risk that if that company goes bankrupt, well, they just lost all their money. So the best option for someone that just wants to, for example, hey, I just want to have my money grow at an average pace with no risk, really, the best option is probably Acorns, because that way it's in a portfolio, very well diversified, and your money can grow with the average rate of the market, and that way you're good to go. And that is code for index funds, ETFs, and a lot of diversification when it comes to your portfolio, okay? It's kind of like owning the entire stock market and not having to take a lot of risk because you own everything, okay? And if you guys want to know exactly who the best at doing this was, although I am investing a lot of money, I am not the best. The best person to ever do this was named John C. Bogle, and he was worth around $190 million. So obviously a lot of money. Now, the second type of person is the individual stock investor. The person that goes out there and instead of owning the entire market in a sense, they go out there and they pick stocks to actually invest into. Now, the pro is if you pick Apple when it was worth like $1, now it's worth $300, so you just basically made a huge, massive profit. But the con is if you pick Apple when it's worth $1 and it goes bankrupt, you just lost all your money. Now, the best person to ever do this is Warren Buffett, and he's worth around $70 billion, okay? So obviously, when it comes to picking stocks, it works if you know what you're doing. And if you remember my example, guys, okay, the entire idea is you're investing into a company. So you want to make sure you analyze the company, understand it, make sure it's healthy before you go ahead and put your hard-earned money into that business or that stock, for example. Same thing. Also, number 3, the third type is actually the day trader. Now, the day trader is by far the riskiest way to actually invest into stocks because all you're doing is buying and trading, trying to predict the market, and in reality, around 80% of them lose money all the time, statistically proven. So it's very risky. If you want to do it at your own risk. I don't do it. I only do long-term and stock picking every now and then when I find a very good opportunity. And lastly, a little bonus here, guys, you also have the gambler, the person that says, hey, I'm going to buy Tesla or Google or Berkshire Hathaway or Delta just because I like the name and I think it's gonna do well because we need airplanes and we also need cars. Like, did you study it? Nah, I don't need to study it. That's called gambling. Sometimes you get lucky, sometimes you don't, and that's the entire idea. And although most of these people don't make money, the stories of the people that make money overwhelm the entire market, and now everyone thinks it's like the norm, but in reality, it's not the norm. It's kind of like a lottery tickets. One person might win, but every single day, so many people lose, okay? And that's the main issue. However, guys, before I go here, I also want to give you guys one last thing. Although you heard me compare John C. Bogle with Warren Buffett, they invest very differently, but they also do understand each other. Warren Buffett understands that if you just want an average return and you don't want to study companies, index funds, ETFs are the great way to do it. And the best way to do it, if you ask me, is with Acorns. And John C. Bogle understands that, hey, if you do want to do that, you want to learn how to analyze companies like Warren Buffett does. However, although you might see like, hey, Warren is worth like 70 billion and then John C. Bogle is worth 170 million, 109 million, the answer is everyone that invests like John C. Bogle can eventually become a millionaire if basically the US economy keeps doing well. However, for every Warren Buffett, there's also a loser that loses a lot of the money. So the answer is this is much less risky. Warren Buffett's method is also very risky, okay? No risk really because you own everything. very high risk because you never really know what's going to happen. Even though the math might seem right at the moment, you never know what might happen tomorrow. But guys, before I go also, I have a link down below for Audible. And this way, if you want to learn how to invest like John C. Bogle passively or like Warren Buffett, you can do that by reading both of their books. And those books are called The Intelligent Investor by Benjamin Graham and also The Little Book About Investing by John C. Bogle. And guess what? You get them for free when you sign up for Audible and you use my link down below. You get 2 free books, and even if you cancel, you can still keep them, okay? Which is pretty cool because it's still like a good investment. That way you learn exactly what to do. But guys, that is it. Comment down below and let me know what stocks are you looking at right now. Comment down below. Let me know. My stock right now that I'm looking at is Delta, okay? I'm looking at the company right now. But comment down below and let me know yours. And as always, if you enjoyed this video right here, well, like this video. On top of that, also subscribe to the channel and hit the bell so you're notified every time I post a new video. And I also have a second channel, and it's called The Tommy Bryson Show, and I post there every single day also. And also follow me on Instagram at Tommy Bryson. And also, if you want to watch another video on how and why I'm investing into Delta, watch this video right here. And also click my face right here to watch it now. And I'll see you guys tomorrow. Thanks for watching. And as always, peace.